Hey legends, welcome back to Jumpstart Your Journey. This training is Understanding Trade Ideas. In this training, we're going to review what is a trade idea, the benefits of trade ideas, where to find them, and elements of the trade idea. So, starting out, what is a trade idea? Well, a trade idea is a suggestion given by our educators for entering a trade at a specific price or time point. It includes parameters for proper execution. Trade ideas can be used for many things. First and foremost, they're an excellent learning tool, especially when you're first starting out. They can help a beginner trader gain experience and confidence with entering and exiting trades, and can encourage and empower members through community conversation. There's just something about taking the same trade with a group of people and being able to talk about it. By trading in a demo account, trade ideas can help members learn the mechanics of placing trades, such as entering the trade itself, setting a stop loss, setting a take profit, calculating appropriate lot sizes, exiting trades, and gaining experience in the psychological aspect of trading without losing money. What kind of great is that? You can learn, right, while you're learning without having to lose money in doing so when you're trading in your demo account. This also gives members an opportunity to earn while they learn when trading in a live account once they've gotten comfortable. So we need to know where to find these trades, right? It's super important that you get plugged in and know exactly where to go to find what you need so you don't miss an opportunity of making some money with these trade ideas. First and foremost, you can log into your account at www.l2gtradeacademy.com and you can locate trade ideas there. As well, if you go into our Discord server, you'll be able to locate the Trade Ideas channel on the left-hand side of the screen. All right, so we're going to be looking at the different elements of a trade idea, and here's a little overview of what we're going to break down next. First, we want to look at the time of the actual trade, the pair that's being traded, the type of trade that we're placing, the entry point, the take profit, and the stop loss, all of our parameters. You're going to find all of this information right here on the signal as posted here to the right side of my screen. So first and foremost, let's take a look at what the importance is of the time on an actual trade idea. You'll see it located on the top right-hand corner of the actual trade itself. The time of the trade idea is important. It's important to verify because it can actually dictate the validity of the trade. If too much time has passed or if the market has moved too much since the time that the trade was posted, you may be late. If it's already hit take profit or stop loss, you don't want to enter that trade. If you don't understand the charts, it's important that you either enter the trade within just a few minutes of it being posted, or check with the Legends Together community to see if it's still safe to enter. They're all very supportive. All right, next is the pair and asset that's being traded. Here we have GBP USD. This is a currency pair. All right, the majority of the currency pairs are going to be represented as 6 letters, and they are beginner friendly. However, the risk varies with them. There are many pairs to choose from. Our main currency pairs to trade is 26 different pairs. And if you take a look at this chart here, this volatility chart, you'll be able to see which ones are safe for beginners, being the top ones, and which ones are for maybe a little bit more advanced, being the bottom ones. Okay, so the blue pairs are going to be safer for new beginners. Okay, there's lower volatility, smaller drawdown, so your trade's going to go in the negative less than the high volatility pairs. And it's good for smaller accounts, anything from $20 to $100 to $200. These are great for low volatility pairs. High volatility players, these are going to be more advanced. They're going to have larger drawdown because they move more in both directions. Move more in both directions. These are good for larger accounts, $500 to $1,000 at least, and you can really look at trading these pairs with ease. All right, so next we have our indices. Guys, these are like the Usain Bolt of the market, okay? The way you identify an indice is that it ends in numbers. Well, most of them. GER 40, the German 40, it actually is represented as DAX on the market now. However, all the rest are going to end in a number, like NAS 100, also known as the NASDAQ on the stock market. US 30 being the Dow Jones, UK 100 being the UK top 100 companies, France 40 being the top 40 companies in France. These are assets, okay? These are extremely volatile, meaning that they move very fast in both directions. These are not beginner friendly, okay? These are extremely risky. So it's highly encouraged to stay away from these until you get comfortable with the low volatility currency pairs. Next, we have our metals. You may see trade alerts come out for metals such as gold, silver, and platinum. Gold being XAU USD, silver being XAG USD, and platinum being XPT USD. There's only 3 that you may see really that we trade, so go ahead and jot these down in your notes to reference them. Now, it's important to note that metals do not move as slowly or as consistently as your currency pairs will, especially your low volatility currency pairs. These are actually very volatile. Although they don't jerk around and make big moves all of the time, when they do move, it's typically in a very spiky motion, so it's very fast. All right, these are incredibly risky because of that. If something happens in the market that causes a metal to move swiftly, if you happen to be in the wrong side of the market, you could blow your account pretty quickly. So again, not necessarily the most beginner-friendly thing to trade. And then finally, we have our cryptocurrency. Cryptocurrency does not move super fast all the time. This is our Bitcoin, Litecoin, Ethereum, Ripple, and whatnot. So on the cryptocurrencies, though, they are not really the most beginner friendly simply because they don't move as consistent as the rest of the market. They're not as regulated. They don't have the same regulatory authorities as the Forex market, therefore making cryptocurrency very risky to trade. Again, not the best idea to trade this as a brand new beginner until you get comfortable sticking to those low volatility currency pairs starting out. All right, next we're going to talk about the types of trades. All right, so underneath here you can see that this trade says sell now, market execution. So let's break down the different types of trades and what they mean so that you have an understanding of what you're looking for whenever you place a trade. First type of trade we have is a market execution. That means it's immediately activated from the moment that we hit the button to take the trade. There's 2 types of market execution trades, a buy and a sell. And on the flip side, we have pending orders. Pending orders are going to be delayed. This is a conversation between you and your broker by you placing an order, but saying you don't want it to activate until the market reaches a certain price point. We will send out trade alerts that come either as market execution or pending orders. It's important to note which one you're placing. There's 4 types of pending orders that you can place: a buy stop, a sell stop, a buy limit, and a sell limit. So what do these mean though, right? So market execution, as we said, immediately activated, buy or sell. So what is happening whenever we buy or sell? Well, first, let's look at market execution buy on the left-hand side of the screen. Current price of the trade is immediately activated the moment we hit the button. Our expectation is that the value of that market or that pair is going to increase. And the more that it increases in value, the more money that we make. And then on the opposing side, we have a sell market execution. This is where current price is higher, and we are expecting that the value of this pair will decrease. And since we're immediately activating this trade, the lower it goes from the moment we hit the button, the more money that we make. Next are pending orders. Let's talk about the buy stop. This is a little bit more complex than just your market execution, so I encourage you to take pictures of the slides, draw the pictures in your notes, right? Because these are going to be great to look back on to help you understand what you're expecting to happen inside the market when you place these trade ideas. So buy stop, current value of the market is low, and we place an entry point that is a price point higher than what the current market is. So current value, price is low. Buy stop entry price is going to be higher than that value. And our expectation, right, is that the market is going to increase in value and reach our entry price. Once that price is met, our trade is now activated. Okay. And now our expectation is that the price is going to continue increasing in value, and it's going to go beyond our entry price. And the further it goes beyond our entry price, the more money we make on the trade. And on the opposing side, we have the sell stop. The sell stop is where the current value of the pair that we're trading is currently higher than we expect it to stay. And our entry price, however, is going to be lower than the current level of the market. And our expectation here is that the market's going to decrease in value and it's going to hit our entry price, okay? And then we expect it to continue going down, to continue decreasing in value as it passes through our entry price and continues to drop the more money that we make on this trade. All right, let's get into these buy limits and sell limits. These are even a little more complex than the one direction trades, okay? I want you to think of a limit trade like a ricochet effect or a bouncing ball, okay? So for instance, a buy limit, currently the value of the market is high, all right? It's higher than our price point that we're expecting the market to drop down to. So the first move that we expect to happen in the market is that price will decrease first. It's kind of like that bouncing ball going from one hand to the other hand. First, it must hit the floor, right? So the floor in this instance would be our entry price. Once the market drops down and hits the floor or our entry price, we expect for it to bounce right off of that point and head right back up. Okay, so after the market drops down, it hits our entry price, our trade is activated. Now we expect the market to increase in value, and the further it increases off of our entry point, the more money we make on the trade. Okay, so we got the bouncing ball, right? Now let's talk about if we were to throw a ball up to the ceiling. This is a sell limit, okay? Ball starts low, entry price higher than current market value. All right, so currently market value is low. We expect for the price to increase, hit our entry price, that would be the ceiling, and then what happens? Gravity would take over, right? We expect once the trade activates from it hitting, that then the market will turn around and decrease in value. And the lower it goes away from our entry price from when it activated, the more profit that we take home on the trade. All right, so now let's talk about the parameters of a trade, the entry point. As I mentioned, there are 6 different types of trades that technically could be called market execution and our pending orders. So let's take a look at entry point when it comes to these. Sell now market execution. You really need to understand where the market is at the time that the trade was placed. This is going to tell you what your entry point is. Okay? The entry point is when we're telling our broker to activate the trade. On a pending order, however, we are now waiting for the price to actually be achieved in the market before it activates our trade. So as I just mentioned on the different types of trades that we're placing, we got to wait for that entry point to actually be hit before it activates our trades. And as I mentioned, market execution, that's whenever the price is, whenever the trade was posted. So this, right, market execution is very important to pay attention to the time of that time frame or of that trade alert being posted. All right, take profit. What is a take profit? All right, you're going to hear that a lot. And people cheer around take profit because take profit is our goal. This is our expectation of how much money we expect to make or what price point we expect the market to get to. Okay, you're going to see multiple take profits on any given trade. When you have a take profit placed on your trade, it will close the trade automatically once the market achieves this price point. It's okay to close the trades early in profit. We don't have to wait for them. However, having a TP placed is also a great way to protect your money just in case you're not paying attention. Just so you know, as I mentioned, there are multiple take profits that come out with our trade ideas. It's highly encouraged that our new beginner traders stick with Take Profit 1, TP1. Reason being is that Take Profit 1 is the smallest amount of pips you can earn. Although it's yielding a lower return, it has the highest probability of being achieved. And stop loss. I like to think of stop loss like a little hammock for my money. It's literally like a safety net, okay? Stop loss is where you protect your asset. And guys, that is rule number 1. Protect your money, okay? So a stop loss is very important to place. This is how far you're willing to let the market go in the opposite direction before it automatically closes your trade out in the negative. What this does is it prevents you from losing all of your money in your account at one given time. All right, this is actually used to help you determine what lot size you're going to use when you're placing a trade, because you should always know how much money you could potentially lose. And what that does is it supports us practicing proper risk management. You're always going to want to utilize a stop loss, especially when you're trading and not fully able to pay attention or watch your trades. That's it, guys. You did it. Congratulations. Course 4 completed. Jumpstart your journey, understanding trade ideas. We'll see you in the next training.